Hi, everyone. Welcome to the 114th episode of the Timing Research Show for November 28th, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 166th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Matt Buckley back to host again today, so I'm going to go ahead and turn it over to him.
Thanks, David. Appreciate it, folks. Welcome aboard Timing Research. Another great roundtable David has assembled for today of 500-pound heads in the financial industry, and we're going to have a good session today. I know a lot of you are concerned about the Trump bounce and whether or not you should fade it or buy it with both hands or neither or all the above or seek shelter or whatever you should do. We're gonna work through all those issues today. We have Stefanie Kammerman of the StockWhisperer.com. With us, Scott MacBeth of BeatChoiceSoftware.com. Larry Gaines is back with Power Cycle Trading. Good to work with you again, Larry. And Neil Batho of TraderReview.com. So, folks, we're going to keep that same order throughout the day. We're going to Stefanie, Scott, Larry, Neil as we go through our questions, and then we'll take it from there. So Stefanie, and then Scott and Larry. Stefanie, why don't you kick us off? Give everybody a little bit of a executive summary, who you are, what's your background, and what you currently do right now.
All right. Can you hear me okay?
You got it.
And you can see me okay? All right. Excellent. Thank you so much for inviting me to your show. My name is Stefanie Kammerman, but people call me the Stock Whisperer because they think that I have a crystal ball. Well, I'm a tape reader. I've been doing this for almost 24 years. I started in the largest prop firm in New York called Schoenfeld Securities as an assistant to one of the best traders in the firm, and I sat in the $1 million room. And what I learned is that in order to get an edge in this market, the only thing that you need to follow is the big guys, is to follow the money, and that is the dark pool. So I've called the last 10 corrections before they happened by following the same dark pool pattern, which coincidentally, we're just starting to see it today. And I would like to share my screen now, if that's okay, to show you guys what that looks like.
Yeah, you bet. Go ahead.
You guys want to see what it looks like? Okay, hold on 1 minute. Let me just share my screen. So for 14 days, all we've been seeing, let's see if I can get that up there. All right, can you guys see it all right?
Yeah.
Okay, so for 14 straight days, all we've been seeing is the big guys buying. Now, what the dark pool is, just to tell you, 40% of all the volume being done right now is being done in the dark pool. These are the guys that move the market up. These are the guys that move it down. We spotted them buying before the election. So everybody thinks this was a Trump rally. It was not. The big boys were buying before the election happened over here on 11/7. All right, we had late dark pool buy prints from the day before. So what these trades are is these trades are late. So here's one from today, just to show you. Right here, my block trade indicator, this is Charles Schwab. It has dark pool data feed. Here's a print for 500 and 1,000 shares. This is their signature print. 221.65. Did the SPY trade there today? No. The SPY's trading at 221.48. This trade was done Friday and not being reported until today. And the fact that we're below that, for me, is bearish. And when I see 3 days in a row like this, I call a correction. And I've been right the last 10 times. So this is why we need to pay attention right now, especially the IWM. Look at these that are just coming in right now, 134.07. Let me show you this. And we usually get it across the board on the IWM, the QQQs, and the SPY. So you can see these trades, 134.07. Okay, these were not done today because the high is 134. So these were sold Friday and not reported until today, which is really manipulating. So how do they get away with this, right? Well, there's a loophole. if Goldman Sachs does a trade from their London desk and they cross that trade to their New York desk, they don't have to report this trade for 24 hours.
Yep.
This is how they sell millions of shares without moving the market down. It's the same signature. So I've been waiting really patiently for the dark pool to start to sell, so I would know when to get out of my long positions, when to go short. And today is the first day. So we're watching, see how many, but they're like cockroaches. So we've only gotten a couple so far, but there'll probably be like 10, 15, maybe 20 million by the end of the day.
Well, Goldman Sachs has been called the giant, vampire squid sucking off the face of America, and now they've been called cockroaches.
Yes.
So well done.
Yeah.
All right, Scotty, tell everybody a little bit about yourself, your background, and what you currently do with Best Choice Software.
Hurricane Matthew, pleasure to be with you.
Exactly. I am down here in Florida, so we lucked out.
Yes, I am too. I'm Scott MacBeth, and I'm in the Bradenton, Sarasota area, right on the borderline between Bradenton and Sarasota. The road used to be called County Line Road, and they changed it to something fancy. But I work for Best Choice Software, which is the nation's oldest seasonality firm, and I run a Tuesday trading room, just classic spread trading. I have a phrase that and options to options. I love options.
Mm-hmm.
I was the Merrill Lynch options coordinator in Palm Springs, California in 1980. Just came on the
Just
retail
came out.
scene.
Yeah.
Nothing. I only got the job because I was the rookie in the room. The manager said to me, "Hey, New York wants an options coordinator. Who wants the job?" Everybody's looking at their shoes. I'm on the end of the couch, the 20-year-old, and they go, "Hey, Steve, Scott, here, you're the options coordinator." So I took it seriously, though, and it's one of those incidences where something that you think is not so hot turns out to be a blessing. And the only book that I could find was Larry McMillan, Options as a Strategic Investment. I read it cover to cover. And Bill O'Neill had just started IBD, Investors Business Daily, up in LA. I used to drive up from Palm Springs into Century City in LA to attend classes with Bill O'Neill. So I'm a huge fan of Bill O'Neill. I do a lot of spreads. It's just not the normal, bear calls and bull puts and condors. I teach a course. I teach also. So I've got Best Choice Software with the seasonality. My Tuesday room, which I'll give a deal on for David and you guys here today, to any of the people who want, they can write Gary at Best Choice Software and get 2 weeks of my room for free. Special pricing in December. It's a spread trading room. But I teach courses like beyond just the normal condors, which I love condors, by the way. Who doesn't love condors? But I teach naked put writing on high yield blue chip stocks. That's the most conservative way I know how to make 20% a year. I teach a buy, right, what I call a buy, right. Buy a stock, buy the put, and sell a call. That's a no-lose proposition. Your put covers you. It goes up, your call gets called away. A buy, right. Outright buy calls, I usually do it as a call debit spread. I'll buy the calls and I'll sell twice as many calls, 10 points higher. And that's where seasonality comes in. Best Choice Software, if you don't want to poo-poo seasonality, I give you 5 stocks right now that I called out in my room on Tuesdays that were based on Best Choice seasonality. We knew they were going up, or they normally go up. How about 10 years out of the last 10 years? If you want those stocks, let me know, but that's what I do. Spreads and Best Choice Software.
Awesome. All right. We'll love options as well, so we'll definitely have a good discussion here. Larry, tell us a little bit about your background and what you do with power cycle trading.
Yeah, thanks, Matthew. Thanks for having me back here today, David. So been trading, started out in the early 80s, trading oil and on the oil side of things, and ran a really large international trading group, oil trading group, for over 10 years, and then started up power cycle trading back in 2010. But so my background is, heavy on the commodity side, but then also heavy on the option side. So pretty much currently at Power Cycle Trading, we do directional trading using trading models, and then use, options for those trades. and specifically like to, again, use, option spreads as well. So directional trading on whatever we see that's moving. It could be futures, but, do a lot of stocks, ETFs, but then try to do those trades using various different option strategies.
Okay, great. Another good options guy on board here. And finally, Neil, give us your executive summary real quick and what you do at TraderView.
All right, thanks, Matthew. I used to be a broker in the late 90s, fresh out of college, and I thought it was going to be the best thing ever, and never ate so well as I did when I was a broker, bringing in the food every day, doing their mutual fund presentations. But when we went to the training, we had this hotshot broker. He said, What is your job? And everyone said, we're financial advisors. And he says, no, you're not. You are financial counselors. You are to hold the hands of your clients. And when the market goes down, tell them everything's going to be okay and just get more money into your accounts. And I thought, good God, this is really not for me. What a nightmare. What am I going to do with my life? And, I was more into the strategy and the timing of the market. And so I lasted a while. It was a great experience. And a couple years later, started a Trader Review. But luckily, when I was there, the last couple of weeks, I did a seminar on point and figure charting with some guys from another office. And I still use that today. And it's from the late 1800s, invented by Charles Dow. And I think it's, in my opinion, one of the best ways you can time the market. You can time the sectors. You can get tremendous trends because the time is not important on the chart. The chart only moves when the prices move. So I've been using that, and then I added the Ichimoku Cloud the last couple years, and I send out picks to my clients with updates every day.
Awesome, Neil. Welcome aboard. Folks, my name's Matthew Buckley. You can call me Whiz going forward. My parents did love me. That was my God-given name. I earned that as a call sign flying the FA-18 Hornet for the United States Navy. Self-taught options guy as a young naval officer, 91, 90, whatever it was, and never looked back. As I went through my career in the Navy, I started applying everything I learned flying a fighter aircraft, having a strategy, implementing tactics, contingency planning, knowing when to get out of a bad situation before it got worse, knowing when to get out of a yes, exactly, knowing when to get out of a good situation before it got worse, and that parlayed itself into when I got off active duty and kept on flying the Hornets in reserve, started trading full time, and I popped up on the radar of one of the largest volatility arbitrage firms, equity options firms in the world, named Peak 6 Investments, headquartered right there at the intersection of Jackson and LaSalle in Chicago in the Board of Trade. We were right on the 4th and 5th floor. So while I was the managing director of strategy there, I helped start Options House, which is a retail brokerage many of you might use. And then I also I was the founder and CEO of the Options News Network, kind of the CNBC for options, since back then they were just kind of paying lip service for options. So I had an absolute blast doing that, and then decided that Chicago winters suck. I'm a Navy guy. I need a beach. I need water. I need ocean. So I live down here in beautiful Boca Raton, Florida, where we started Top Gun Options about 6 years ago. Have live trading rooms, trade alerts, all that type of happy horse stuff that everybody else does here as well. But enough of that. Now that you know who our 500-pound heads are, we're going to get right into the report David sent out. So, Steph, we'll start with you at the top of the batting order. What direction do you think the S&P 500 is going to open from this morning's open to Friday's close? Do you think it's going to be higher or lower? Just give me a higher or lower, and then as we go along in further questions, I'll get your why behind it.
Well, I kind of went backwards and went to that first instead of really telling you what I do. I went right to the dark pool only because it's been coming across my ticker. And, for me,
well, I could tell when a trader is onto something. So that's why I let you go, because it was
yes,
good. I wanted to hear that.
Very good. But just to let people know quickly that I do run a live trading room where I share my screen. I trade live every day, all day long, from 6 o'clock in the morning to 4 o'clock of course. And I do put out a free YouTube video every morning as well. I have a YouTube channel. You can sign up on my website, www.thestockwhisperer.com. It's like my hot stock pick for the day. Today I had 1, 2, 3, 4, 5 of them, which I could go over later, but I have a 93% success rate on it, which is really because I follow the dark pool. So it's free. You can go, I have 3 years worth on YouTube. But as far as the direction of the market this week, I would have to say down because I'm spotting some selling coming sideways to down. It would be my guess. I don't like to guess. I like to use levels. So being that the dark pool levels today are 221.65, I am bearish below. If we close above that, I will turn bullish again. But for me, it's all about where those dark pool guys are buying and selling. So right now, bearish. But I'm a woman, so I can change my mind, okay? Janet Yellen, she changed it quite a few times.
There you go. Well, we'll get into seeing if she's going to change her mind here in a little bit. Okay, Scott, what do you think about S&P 500 by Friday? Higher or lower from this morning's open?
Down, Matthew, down. Trees don't grow to the sky. We had our Thanksgiving rally, and I'm a big Fibonacci person. I use linear regression channel and Bollinger Bands. His book, he's great. I met him out in LA also, and took classes from him too. So Bollinger Bands very important to me. They're all screaming top. So by Friday, this market will be lower. However, it's just going to reset to go back higher. All the money that couldn't get in now, because this was really a powerful, and you know how it goes sometimes. Sometimes the market won't let you in. Sometimes it won't let you out.
Correct.
When it's just water falling. As a bear market. So that was a won't let you in rally that we just saw. I mean, the Russell was 14 days in a row?
Record, correct.
Right? The record, time for a rest. So I say lower by Friday, but then it just resets to go higher the season, which is a happy time, which is a seasonal long.
Awesome. Don't disagree. Okay, let's see what Larry has to say.
Well, this is not good. I have to say lower too. Everybody's going lower, but yeah, so I'm seeing lower, and this is based off of, well, you see sentiment's high. I think somebody earlier mentioned the put-call ratio, very high on the call side. The other thing that we start seeing this time of year is a seasonality pullback, and you'll see a seasonality trend kind of shift back to the downside just for 2 weeks going into the second week of December. So it's a pretty strong seasonal trend. You get a good push up into this week of December, but then a pullback that starts this week, goes into about mid-December, and then back up again to the end of the year. So seasonality-wise, I am saying based on that, we'll probably get a pullback. Now, the other thing, too, that you're seeing, sentiment's high, but you're also seeing the market's overbought, plus you're seeing what I call momentum divergence, where price has been steadily going up, but momentum's starting to pull back. So that usually indicates either the market's going to stall out, churn sideways, or it could pull back. So if you want to take a good look, like somebody mentioned just a minute ago, the Russell's been straight up. But if you can see this chart here, you'll see what I'm talking about is divergence. This is the Russell 2000 future. So you can see, if you see this chart, can you guys see this? I'm not seeing it here. Okay, so anyway, you can see this has been up for 2-3 weeks straight. And then today is actually the first day we've had a pullback. But you can see the momentum's been shifting, pulling back steadily since that grind higher. So this tends to be an indication that the market's going to start taking a breather or rest, and also really sets up for some good potential trades to do, what we call out-of-the-money bear call credit spreads. So I think that's going to be a good trade setup. So RUT, maybe SPX, do bear call credit spreads out of the money.
And notice that red candle high right there today.
Exactly.
Red candle high.
Yep. So like it.
Okay. Awesome. Neil, what are you thinking the S&P 500 by Friday, higher or lower? You going with the crowd?
With lower. Let me just bring up my screen share here real quick. One of the reasons is the put to call ratio. I was looking that up earlier just as we were getting on the show. Is this showing up?
Yes.
It did? Okay. So here we got a 0.8 on the put to call, so the calls were here.
Oh, wait. No, I'm not seeing it.
Oh, wait. Just a second. Okay. Oh, maybe it doesn't show Excel when I bring it up. Okay.
I saw it briefly and then it went away.
Oh, okay.
Yeah,
It looks like you're.
there we go. You were showing me. Now we can see it.
Oh, okay. So here we got. This is for the indices, total indices, 0.86. The last time it was that low, the market sold off for 2 weeks, and you can see it's almost always above 1. And when I think something's going up for a really long time, I'll look at this, and you can just type in CBOE, put to call ratio, and download it to Excel. And yeah, that's one of the big reasons. I mean, all my other indicators are good. This is the bullish percent. It's the percent of stocks on a point and figure buy signal is good. Percent of stocks above the 50-day moving average is good. It's trending up nice. And percent of stocks above 200-day moving average is trending nice. But I mean, after that record of 3 weeks up and the put to call ratio that low.
All right. I, of course, as the host, getting to go last, can tell that all of you are correct. I wish I could have said wrong, but I think you're all correct, that we will be lower by Friday. Now, I'm just going to give you that because I have my whys to come in a second after you guys go next. So we'll start with Stefanie at the top. How I know you said you don't like to guess, but then give us, everybody rate your confidence in the direction you forecasted by Friday, which I think all of us set down. And then you can give us, Stefanie, all your whys as to, so confidence and whys.
My confidence, it's pretty strong because it's the first day that I'm seeing late sell prints. And this is a pattern that I've discovered years ago. And it has never been wrong. But I like to see 3 days in a row. Okay, when I see 3 days in a row like this, I call a correction. So today's only day one. Sometimes we get 1 day, 2 days of selling, and then it stops like we did in the summertime. And then about a week later, it comes back again. So I should just share my screen a second. So, you know, the whys are popping up right now. All right, can you see my screen? All right, there it is. So you can see right here, as we've been doing this meeting, more and more late sell prints have been popping in here. And here are some on the Qs as well, and on the SPY, another one. So, yeah, absolutely. We're definitely running out of steam. But the question is, you know, where is the money going into, right? That's the big thing. So there's been secular rotation that's been happening. Why did we go up for 14 straight days? And that's because money was going into sectors like copper and steel that were, you know, definitely underbought. And so that kind of spewed it, and it took a while to go into technology. Finally, Apple started to get some buy prints coming in. Last Monday, we spotted 15 million at the bottom here at 108.93. So some coming into tech, but I feel like it's just been rotating. In order to have a correction, everything has to kind of go down at the same time. So, you know, right now this week, I can see money's been going into, actually since last week, natural gas. So there's always places to go long, always places to go short. I, like you guys, love to do options as well. It's a great way to put on trades, you know, with much less risk when I see that obviously a correction is coming.
Sounds good. Okay, Scott.
Agree with Stefanie, and the very fine point about this market may go sideways to a little higher now because momentum just carries it through. You know, markets are not rational, and when they're being pushed, even though it's at the top of the channel, it can stay overbought longer than we can stay solvent. You know that. So it could go a little bit higher, but my confidence on going down is 85%, just lower by Friday. And I mean, it could be just a little bit lower because this market is strong. Like she says, where's the money going to go?
Mm-hmm.
So the red candle high today, shown just a little while ago, it shows all green, 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 green. Boom, first day of a red candle high, and it's near the top of my linear regression channel.
Roger that, and you're exactly right. One of those Wall Street isms that we've all come to know pretty well is you trade the market you have, not the market you want. So if you look at that chart of the S&P 500 and just see it taking this Brexit-like climb there, and that it can only keep going higher, you can't push a market down with your will. So trade the market you have, not the one you want. I personally think the economy sucks. And all the most of the macroeconomic data, industrial production, a lot of the macro data that's come out for the past year and a half. I personally think we're in a recession, and they'll probably announce it, January 21st. And of course, the media will be like, Trump, put us into a recession type of stuff. But I agree. I think we'll get a little sideways to higher, but I'll tell you what I think here in a little bit. Larry, how about you, man? Your confidence and your whys.
Yeah, just I'd say kind of 90% on the confidence base, just to pull back, churn sideways. I mean, again, I agree. I don't think it's going to be a huge collapse or anything. I think it's just that kind of taking a breather. And you can just, again, if you can pull up my chart, you just see that momentum divergence where momentum's off, and the prices were just having that nice, beautiful grind higher. Today's the first day we've had kind of that pullback, and you can see momentum is shifting down. So this is a momentum indicator, just straight down. So when you see that, it just tells you to be cautious to the market, and it's a good environment for kind of maybe the market to kind of consolidate. And usually what markets will do, they'll have these huge moves up, which this has been extraordinary on the Russell especially. And then they're just going to have to collect their energy again. So they're just going to kind of start basing sideways, consolidating, and then, you look to get back in probably that second part of December. So that kind of looking at that seasonal aspect of things, markets tend to pull back in the first 2 weeks of December. We've got high sentiment to the long side with the put call ratio showing lots of calls versus puts. Seasonality trend potentially to the downside is usually the trend this time of year. And we've hit a lot of Fibonacci levels to the upside. So combination of all that, I think a little bit of a pullback and churn sideways to down.
Sounds good. Neil, how about yourself? Your probability and also why?
Yeah, I'm going to go 75, 80% down. One of the reasons here, you can look at the S&P 500 here. Bounced straight off the 200-day moving average with RSI at 30. Now the RSI just touched 70 in a combination with those put-to-call ratios. And the record of 14, 15 days in a row, come on. Who are we kidding here? Just take some profits, get it off the table, and wait until another time to buy, maybe a pullback here somewhere, and then a small break off the pullback. But I wouldn't add any new positions at all. But I guess I'll wait till later in the show because we give away a free pick maybe, right? So maybe I'll hold that off a little bit later.
You got it, man. Okay, so let me throw mine up here and make sure I'm doing it right. Let me go full screen. We'll go back in time for a second, and I'm going to share my screen. Okay, so and now's the time where I get to do a victory lap, and my members know this. I have it all recorded, so I'm not lying. I think me, Jeffrey Gunlock, who runs Double Line Capital, and maybe a homeless guy on the exit ramp of I-95 down here got this right. I predicted a Trump win, and I predicted a Trump rally. I was months, especially the month leading up to the election, I think I went through 5 TVs as I smashed them all watching CNBC or all these idiots, or even at Citi. Citi came out with a report just before the election. I think it was Monday, the day before, or a couple days before. Market will implode 5% on a Trump win. I hope that person got 5. Well, I told all of my. Well, it is Citi, but Goldman also came out with that. A lot of the big houses said, "Hey, a Trump win, and the market's going to implode." It's the dumbest thinking I've ever heard in my entire career. So, completely swam against the stream. I actually told my folks, I said, "You can copy this Brexit implosion and bounce if there is a Trump win." Well, that implosion was at 2:30 in the morning as I sat out back here watching the futures implode 800 points and then immediately bottom out, and then here we are. Both of these we ripped through a 50-day. We smashed through the 200-day just because we had so much airspeed to the downside. But pop through. We touched and then bounced up here. I think, again, you could copy and paste this to the right. Like a couple of you guys said that we're going to, I called this kind of summoning, we made a nice base camp here, and then here's Mount Everest. We get hypoxic up here. There's no air. We kind of run out of air. Exactly. Where do we put our money to work up here? It's got to go somewhere. And then here's the Fed meeting, election crap, and all sorts of buffoonery. So, but I would say, like I said, we have to take a break eventually. Is that a rule written somewhere? No, I'm the chief development officer for a hedge fund too, and on all the calls and all the people I talk to, everybody's getting a little hypoxic up here, saying it might be time to take a little bit of profit, reevaluate what's going on, and keep some powder dry. So I'm very confident of that. I'd say about 80 to 90% to the downside, but not an implosion. I just think, based on the question, where do we close on Friday? I think we close lower than today's open, but we start churning sideways. I, however, thought this would have already happened. I put on a weekly options bear call spread on the S&P 500 a couple weeks ago that got bumped into, and I was wrong about that, and I relearned an old lesson. Don't try and put a top on the market. You got to trade the market you have, not the one you want. So I think we'll eventually churn sideways a little bit here and then higher. The only thing that could potentially be on our radar that's going to be an implosion by the end of the year is some magnificent disaster out of the Fed. It's the Fed funds futures rate. The last time I looked was almost 100% that the rate hike is going to be baked in. I think the market would be shocked if she didn't. That might actually be the move to the downside. Like, wait, well, wouldn't that be good news, Whiz? No, it wouldn't be, because I think if they didn't hike, that's when everybody looks at each other and goes, okay, well, the Fed knows something we don't. The economy must be worse than we know, and what's up? So lower, like I said, high probability. The biggest thing on the radar for me for the week is there's a lot of macro stuff. Mario's talking later in the week. Sometimes what he talks about, overseas can ripple across the pond. Last time, what was it, 2 meetings ago or 2 speeches ago, the market didn't get the QE that it wanted. It got some more bond buying and negative interest rates, but it wasn't enough, and the market went bananas. So, and we felt that too. Also, Wednesday night, I'll be watching China. Okay, sometimes people wake up Thursday mornings and the futures are down 100 points, and they're like, well, what the hell's happening? Well, if they come out with really bad data, remember that they do impact us as well. So keep an eye on Thursday night China data. And then obviously we got the non-farm payroll on Friday. I don't think it's going to move the market that much to the up or to the downside unless you see some dramatic Obama outlier, like one of those 35 grands or 87 grands or whatever those. Is there a 1 missing in front of it? Jobs reports that we've had. So that's where I am. That's what I'm looking at for the week, and that's where I stand. Okay, so let me stop sharing that stuff and head back to our questions here. So, Stefanie, you are up next, and you guys can obviously comment on each other's and especially my ramblings. But you gave us the reason. So, actually, yeah, let's move on to number 4, and then we'll get into kind of our good trades that we're liking. Have you ever, or do you currently use any type of auto trading execution with your strategies? If so, how well has that worked for you? If not, why have you not tried auto trading?
If I was doing auto trading, I wouldn't be here right now. Okay, I'd be on the beach. I seriously.
Good point.
No, I'm not a big believer in that kind of stuff because I'm a tape reader. So I don't know what the tape is going to spit out in the next minute. I mean, I've sat here eating my lunch, and all of a sudden I get an enormous print, and it's a fantastic trade. We trade off of it. It makes my whole day. So, or I can sit here and be really bearish with you guys, and then all of a sudden we end this conference and I see a huge buy print come in. Then I'm going to be bullish. So auto trading is not going to do that. It's not going. It's hard to spot refreshing, which is what I teach. That's how the big guys buy and sell thousands of shares without moving the market. They refresh the offer. They refresh the bid. I really like to watch the price action. I like to watch the futures when I'm watching stocks as well. So I think that it's almost impossible to find that perfect system that's going to trade for you. I mean, if anybody has found it, let me know, but I've yet to meet somebody that's said that they're doing auto trading and, they're making a lot of money. They don't have to be here anymore.
Yeah, I agree with that. Scott, what do you think about the auto trading thing? And you might be on mute. Are you there, Scott? All right, Larry, we'll go over to you.
Yeah, okay. So thanks. So I'm a big believer in using systems because it helps to take your emotions out of your trading. So whatever that system might be. So a lot of different systems that you can use, but I don't believe in the auto trade side of the things. I like to have discretion on the trades to, look at my system. I know my rules are black and white, but I may decide that I don't want to take the trade because maybe something like, somebody did come in and buy a huge amount at a certain price. But anyway, I always like to have discretion. So that's my take on auto trading.
It's funny because they in the F-18 Hornet, there's actually a system that's called auto throttles, auto land. So it's almost like the Death Star. The ship can lock you up. You can click on the autopilot and the auto throttles and just kind of be a passenger as you land aboard the ship. I think the only people who thought that was cool were the nerds, engineers who designed that system and wasted a lot of money. I think I did 2 of those landings out of 680 landings aboard the ship, and I was ordered to do those landings automatic because they wanted to see if the systems were still working. I'm like, well, great, thanks for picking me. Yeah, my opinion was if I'm going to be a flaming ball of wreckage down the flight deck, I'm going to do it, and a computer isn't going to do it. If I'm going to kill me, I'm going to kill me, and not let anybody else. So I think that was well said. Scott, are you back up? I think we had you on mute.
Yes, can you hear me?
Yeah, we got you.
No, investigated it. Had friends, lots of friends in my trading community who tried it with Forex. It was very popular with Forex, and also none of it worked for anybody. So I would never want auto trading unless I could be inside the Goldman Sachs room with the computers and all their MIT graduates. I want that computer because those machines they create their own reality.
Correct. Well, that's exactly right. And if you have the Borg, the Goldman Sachs board, auto trade away. If not, I wouldn't be doing it. Neil, how about you and auto trading?
I am working on some stuff. It's a semi-automatic stuff for Forex, and the way it works based on Ichimoku Cloud. So if something's it's in a downtrend, let's say on the 5-minute chart, trading below the cloud, and you're thinking I'm long-term bullish or at least medium-term bullish, I want to get in. So the way I want to set it up is it's going to, as soon as it passes through the cloud to the upside, it can't go too much. It's going to have to be within a few pips and have a few candles close within those pips above the cloud. And if it's still within that reasonable range, it's going to be getting you in. And then it's going to ride that trend of the cloud. And I have a few ways of getting out to the upside using trailing stops that get smaller and smaller, and ways to get out on the downside. And the reason I was thinking about coming up with this is because so many good Forex trades happen by the time you wake up in the morning and you say, good God, where was I at 3 in the morning? And I should have been, buying the Swiss franc or Jesus, and short the euro. And so it's definitely something I'm working on, but it's not a black box technique. You got to be there and you got to set the orders, but setting them is exactly the same kind of thing I would have done anyway. And if you've ever been trading Forex manually, you'll see this move and you think, oh, maybe I should get out. 2 seconds later, you lose a couple pips, but the software would have gotten you out. So it's something I'm working on to design right now. Yeah, we'll see what happens.
Well, that makes sense, especially if you're trading the backside of the clock. You can't trade Forex 24 hours a day. Well, yeah, you can. Whiz, there's Forex market. No, I mean you can't unless you want to, be high on Jolt Cola and ding dongs or something like that. So I personally call that a junior trader who I hire and will sit up all night. But all right, now let's go to the top of the order for the best part and why most of the folks are sitting here right now. Stefanie, we're going to go top to bottom of the order. Give us your best, juiciest Trump trade. What trade do you like for today? What trade do you like for the week or for out to January of 2019? Give us a nice looking trade that you're looking at.
Okay. Let me just share my screen again. All right. Well, I was screaming. They call me the Whisperer. Okay. But I was screaming. Can you see my screen? Yeah. I was screaming at the Las Vegas Traders Expo. November 16th, we spotted the biggest, and I say the biggest because I've never seen any bigger trades than these on Apple. All right, so this was 8.6 million, 6.4 million, two different trades, 15 million at 108.92. All right, so really, I love the Apple trade. The level I'm watching today is 112. All right, I like a close above this 112 level. There's a lot of room to go up until it hits this gap. There's a gap in the chart right here. Now, a very popular pattern is to go up to the gap, the strongest level before it. And so I like to get out there, and then it backs down, and then it'll come full force and fill the gap in usually. But my favorite trade has always been to the gap. So, you know, especially look, if Trump does give Apple a one-time tax break on the millions and billions of dollars they have overseas, that will be good for Apple. I'm not a fundamental trader, but there are some fundamental reasons that Apple could do well. They have that new 8 series phone that has curved. They have a new operating system. I have a daughter in college, and when my daughter tells me that she's going to buy something, she's not the only person buying it. I've learned to buy the stocks ahead of time. So she's getting that new, it's been working for years. So she's getting a new Apple computer in a couple weeks. So they have that new operating system. I know a lot of people have been, you know, Christmas is coming. Samsung phones have been going on fire, you know. So fundamentals are one thing. I'm not a fundamental trader. I trade strictly on the print. So as long as Apple stays above 108.92, I'm going to be bullish on it. So that's my pick for you.
Love it. I have a weekly options bull put spread on that I put on after that gap up. Love the gap analysis. So I agree with your thesis. I love the rumor of if they're allowed to bring their own cash back. I mean, what a concept.
Yes.
I mean, how stupid that we're talking about potentially a $30 billion buyback, which Carl Icahn would even call rude, maybe, and he's the one that wants a buyback. So I'd like to trade like the thesis. Okay, Scott, what's your Christmas gift, early Christmas gift for us?
Facebook, Matthew. Seasonality, Best Choice Software has Facebook, a seasonal long. So I'm going with Facebook January 125 calls.
Facebook Jan 125 calls. Okay, got that written down. I think you guys are Top Gun Option subscribers because I have both these positions in here. I've actually not that short, Scotty. I love Facebook, but I love it also out to January of 2019. I have synthetic stock, synthetic covered. Sure. Yeah, synthetic covered calls, and also doing some long call diagonals with protective puts. I think Zuckerberg, they gotta really start to monetize Instagram more. But his ad software, my techie used to do Facebook ads. It would take him like 20 hours to really optimize one. A couple weeks ago, he showed me the process. Now it took him 20 minutes, and he was so like geeked out and everything like that after the demonstration because it would auto optimize, and I mean it was like the HAL 5000 coming to life. And at the end of it, he was so happy, and then he looked at me. He's like, wait a minute, did I just work myself out of a job? I'm like, no, I just have 19 hours and 40 minutes of other time that you're going to be so good trade. I love Facebook as well.
And of course, we can sell the puts to help pay for the calls. You know,
that's exactly right. Absolutely. Yep. Put the bull put spread underneath it and keep some monthly in, and that's a great idea. You sell those front month bull put spreads and help pay off that deep in the. I buy the deep in the money 80 delta calls just with a little bit more meat on them out in time.
Oh yes, one of my favorite trades is let's just talk about it right now is because you can buy long, like you leave and sell weeklies against it. You end up in the future having a no cost trade.
It was paid for. That's exactly right.
Paid for.
Yeah, that's a great. The analogy I use down here in South Florida, of course, is I buy these deep in the money 80 Delta calls, which is like going to the Boca Raton, Ferrari dealer, and then I sell those front month upside calls or the weekly upside calls, and I have a sugar mama or a sugar daddy, depending on which way you fly that way. And yeah, we pay those off. So that's great. I closed a JP Morgan trade 2 weeks ago. That was a $35,000 trade in 15 months just by doing that type of tactic. It obviously helps that financials have popped on the Trump win, but that's great. Yeah, couldn't agree more, Larry. All right, Neil. Or did I skip? Yeah, Neil.
Yep. Okay. Last time I was in trade on the show, I said to buy U.S. Steel, went up 65% in a month. And I think that's the best sector for the next couple years. But for just this week, I think you might stand a chance on Nugget, the triple leveraged gold stock ETF. I've been telling everyone really to stay away from gold. This is purely only a bounce for a couple of days. You might be able to get up here into the 10, mid 11 range, 1188 of a high. That's really the only pick that I have this week because gold is not correlated to the market right now, although sometimes it is. In 2008, 2009 sell-off, when stocks sell off, gold really sold off too. But now the money's got to go somewhere. Someone wants to buy something even when everybody's selling. So I think this might be a chance for the week's short-term trade on gold miners.
Awesome. Okay, Neil. Let me grab mine. I'll muddle around maybe 2 of them here because they're related. I just talked about one of the JP Morgan trades that we closed. That was a Jan 17 trade. It was a long call diagonal with a protective put, $35,000 in 15 months. So that made about $2,300 a week. Same thing. We're seeing that. I put this one on 8 months ago, and this is a Jan 18 trade on JP Morgan. That's up $19,000 in 6 months or whatever. These aren't sexy trade like this. Stephanie was talking about Apple. Here's my weekly bull put spread that closes hopefully on Friday for max profit. The 109-110 bull put spread. It's up $640 right now. Should be 70-80% probability making $1,600. So I like what Stephanie said about Apple, especially for the short term. Might actually leg into an iron condor this week and put a little bit of a cap on it because I think it's going to chop sideways with the overall market, as we all discussed for today. But back to the financial. I don't think it's too late. My 2 trades would be I kind of have an Olympic lineup for my members. Goldman Sachs, gold medal winner, pun intended. They're the Death Star. They are, to use Stephanie's one of her analogies, she talked about roaches. Well, roaches, Twinkies, and Goldman Sachs will survive a nuclear explosion, period. And Goldman Sachs most likely financed the nuclear explosion and will finance the rebuilding of it. So out of my financials, Goldman Sachs is a must. And I would do I go as far out in time as I can in my time machine using options, which would be the Jan 19 series. I buy a deep in the money 80 Delta call, so it's got some meat on the bones. And then I'll buy that protective put. I call it a disaster put. It also reduces my haircut or my, what options house is going to keep. Hey, man, you need a little bit of scratch in case Goldman Sachs goes to zero. Well, it's not going to zero. It's Goldman Sachs. We don't care. You need it. So I buy a protective put underneath it. And then as we were just talking about, I sell that upside front month or front weekly call every week or every month. And I bring in a nice car payment, $900, $1,000 every month. So that's how these type of trades can make this is 6 months here, folks. Do the math. That's $3,000 a month on this JP Morgan trade. Again, it helps that it did this, but we knew it was going to do this. Like I told you, we predicted here at TGO that he was going to win, and that financials would rally. Financials are also going to rally, we also have a Jan 19 position on the XLF. Remember, folks, and as you got to break this Wall Street euphemism up into and parse it. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Well, put a little asterisk at the end of that and say most. stocks. Why? Because the financials, that doesn't apply. They want interest rates to be high. I mean, God, you go to, drive past your local bank, you haven't seen a poster up there that says, come in and open a CD and get a free toaster. If you went into your bank today and tried to open a 10-year CD or something, I think they'd hit you in the head with the toaster. And after they, stop laughing at you, would throw you out of the bank. There's nothing in it. So if Janet comes out this month and says, hey, we're going to do a nice green span upward stairs move in interest rates, these financials are going to continue to take off. Now, for all of you sitting there going, well, this chart looks, they've already had their pot. How do you know? I have a lot of members who say, Whiz, aren't you going to wait for the XLF to pull back? I'm like, who are you, Nostradamus? I don't know if it's going to pull back. If you do, mortgage your house, mortgage your kids and your wife, and get short. Well, I'm not that confident, then don't. If you have a Jan 19 trade, who cares if you got in it exactly, pinpoint accuracy? So I still like the financials. I know they feel and look a little overheated, but if she raises when she raises rates in in a couple weeks here, I think that's another sign for a little bit of an all clear for financials to go higher. Even if I got into a Jan 19 trade now on I forgot Goldman Sachs, JP Morgan, and Morgan Stanley. That's the gold, silver, and bronze for me. But I prefer Goldman or JP Morgan. But like I said, even if you got in when we're a little heated right now, a year and a half from now when you're closing that trade, hopefully for a nice, huge gain like we got out of $35,000 in one trade on JP Morgan, I think you'll be happy with that. So that's my trade, is getting into the financials now, especially in front of the Fed meeting before they lift off even more. And even if you think they're not going to lift off even more, you might be saying, oh, damn it. So, all right, guys, well done. I got some trade. I know I wrote some stuff down that you guys were talking about, so appreciate all of that. Hey, Steph, let's go around the room, top to bottom, and let us know how we can reach out to you and follow what you do or get a hold of you or maybe do a test flight with you or something like that.
Oh, sure. So I run a live trading room every day, and you can join. I have a 30-day trial membership. If you just go to my website, www.thestockwhisperer.com. I have beginner traders, intermediate, and advanced traders, really great traders in my room. Most of us do trade options. We watch the futures, trade stocks. And I also have a free YouTube video that's available. Just go to my website and sign up. And you'll get the free video every single morning before the market opens up. So, for example, this morning's Whispers Val, we were bullish above $8.50, and you can see this thing took off. GDX, you mentioned gold, really like it as well, bullish above the 21 level. We spotted a big buy print there, $20.97. Also, XLP, another trade this morning, we were bullish above $50.80. So you can listen to my video. It's up there on our website for today's Whisper. And so if anybody has questions, Stefanie at thestockwhisperer.com. And thank you so much for inviting me on the show. It's been great.
You bet, Stefanie. Thanks for coming. And give me a call when you're down in Boca, and I'll buy the first round when you're down here on spring break. Unless you're busy during spring break doing God knows what. All right, Scott, how about yourself, man? How can we get a hold of you and see what you do?
Thank you very much, Matthew. It's bestchoicesoftware.com. That's where to start. That's the website. You can see my room on there, but bestchoicesoftware.com. And then the director of marketing who's on today, great guy, Gary Humeski, software.com. He's the one who'll discuss with me, what do you want to give away, Scott? I'm very flexible. I know that once you try my spread trading room, you'll likely stay. So I'll give 2 weeks for free or a month for free. But Gary at bestchoicesoftware.com starts the conversation. And if you want to call us, it's 941-758-58. The old 747-5858. Down here in 941 area code. And we'll work out something. We'll give away something. There's one thing, the seasonality software. If you want to play the seasonality game and get taught, do that. If you just wanted to do spread trades, we have another person, Hank, he's the calendar and diagonal guy. So, Moto, many options to option.
Love the 747 going down the strip, man. Larry, how do we get a hold of you or do what you're doing?
Yeah, thanks, Matt. So just check us out at www.powercycletrading.com. And, we too have a virtual trading room open each and every day. So you're welcome to take a trial membership to check that out. We do a lot of different types of trading, a lot of seasonality, a lot of options as much as we can, and futures day trades. So just kind of cover a lot of different things. So check us out, powercycletrading.com.
Sounds good, my friend. And Neil.
Thanks, Matthew. Sure, you can go to TraderReview.com and subscribe to the free newsletter, and you get a lot of cool reports that I've written over the years, what I learned as a broker, and
I think we lost your last couple words there. Might have lost you at the end there. I'll just wrap up real quick, folks. You can head to go.topgunoptions.com/goflight, just like the Apollo 13 movie. If you want to be go for flight, that's where you need to head. Go.topgunoptions.com/goflight. $28, 14 days. It's a 2-week test flight. $20. What's that? A crappy bottle of Pinot Grigio or something like that. So for the price of a bottle of Pinot Grigio, you can get access to our live trading rooms, our alert service. We send out our alerts via text, email, and also if it was a live trade brief like this, you get the recording, about 30 minutes afterwards, because I have to render the recording and stuff. And we'll throw in a bunch of our manuals as well, which are great to just download, put on your computer, your iPad or whatever, when you're hanging out and what the hell's a calendar. You can go to that chapter and knock out a quick review of that. And our phone number is on this page as well if you have any questions. So with that, I will turn it over to my friend David. David, thanks for having me and once again assembling a great group of traders here. And I'll turn it back to you, my friend.
Thanks, everyone. Great show. I just want to remind everyone watching that you can go to TimingResearch.com and download any of their past reports or view any of the past shows there. Also, be sure to hit the subscribe button for the YouTube channel. You can get updates on future shows. And be sure to join us next week. We're going to have actually 3 first-time guests, Anthony Crudell, Mark Dannenberg, Simon Klein, and then also Fausto Gleisi and Rob Hanna will be joining us again. So just want to thank everyone again from this show. Stefanie Kammerman of StockWhisperer.com, thanks for being on for the first time. It was good to meet you in person last week in Vegas. So thank you. Scott MacBeth of BestChoiceSoftware.com, also a first-time guest, so thank you for being on. And then Larry Gaines of PowerCycleTrading.com, Neil Batho of TraderReview.com, and Matt Buckley of Options.com. Thanks, everyone.
Thanks, David.
Thank you.